Hey guys, what's going on? It's Rekt Capital and welcome back to the channel. Today we're going to be talking about Bitcoin through the lens of the Pi cycle moving average, the 111-day moving average, the orange moving average here, which is supporting this current micro uptrend for Bitcoin and could be a very key reference point as we see this current dip take place. We're going to be talking about how this Pi cycle moving average tends to figure as a consolidation area, a moving average that facilitates consolidation and previous price reversals for Bitcoin. So let's dive right into the video. Subscribe to the channel for more videos like this in the future, and of course like the video if you enjoy my data science focused videos here about Bitcoin and other cryptocurrencies. Let's dive right into it. So Bitcoin has been forming a micro downtrend for a while now. Since mid-November, there has been a consistent downtrend, and Bitcoin for the past 5 days, 5 consecutive days, hasn't been able to daily candle close above this black diagonal to confirm a breakout from this downtrending channel. There was a fake breakdown, but we've been able to reclaim this market structure. However, that daily candle close beyond this black diagonal hasn't been able to materialize, and so we haven't been able to break out from this structure, and in fact, we've rejected from this structure most recently, and it looks like we're going to be heading for the bottom of the structure. Can this structure give way in a way that Bitcoin could be able to retest this 111-day moving average, the Pi cycle moving average? And the answer to that question is quite likely we could see some confluence support at around the bottom of the structure and this Pi cycle moving average. This Pi cycle moving average has been a key reference point for price and was essentially the bottom for that previous price reversal, that we saw in September. We formed an ascending triangle here, and you can see that the moving average has been inclining during this consolidation period, essentially figuring as the base for this overall ascending triangle from which we broke out from and made new all-time highs. And of course, since that time, the Pi cycle moving average has climbed even higher and is now figuring once again as a support, potentially facilitating once again a new consolidation period at around these regions. And we're probably going to see some consolidation take place here before another price reversal. That's at least the thesis for this Pi cycle moving average situation that we're seeing here. Could we in fact see something very similar to what we saw back in September? Because there are a few similarities here. We're seeing consolidation, just like we saw here, at around the Pi cycle moving average, which is actually figuring as the base here. So as we continue to decline, can we see a higher low form relative to this low, which actually successfully retested the Pi cycle moving average as a support? In which case we'd see this uptrend line, this higher low, and it would be really interesting to see this be the top of what is essentially a picture perfect repeat of history in the form of an ascending triangle to what we saw back here in September. And the thing about that is that we are seeing not extremely, fearful sentiment. And we're only going to see this drop because as we see price drop generally here, we're going to see this fearful sentiment drop even lower, reaching extremely fearful sentiment. And the last time we saw extremely fearful sentiment was back over here in the ascending triangle, which formed a base at the Pi cycle moving average, having retraced 25% at the time. And the thing about that is, could we see an ascending triangle form at the base of this Pi cycle moving average, having seen a minus 23% retrace? Lots of similarities here, which is quite interesting because we're not just seeing similarities in the data science whereby the Pi cycle moving average is supporting the base of these ascending triangles, this price action analysis tying in together with the data science as well, but also the retracements are of similar depth, which is quite interesting in of itself. But above all else, we're also seeing very similar sentiment. there was extreme fear right over here after a 25% retrace. There is fear, and quite possibly tomorrow we might see extreme fear on the fear and greed index after a 23% retrace. So lots of similarities there. Something to keep an eye on, because the pi cycle moving average essentially gave us that confirmation that we're back in a bull market, and once again we're going to be testing this confirmation as well. The pi cycle moving average needs to continue supporting this move here for us to be confident about this bull market continuing. Bitcoin is still in a bull market. A 23% retrace has been able to inspire so much fear in the market simply because we've retraced from old all-time highs, or at least new all-time highs at this point, and we've seen a rejection since then. So people are fearful about a bear market, and the fact is that we are still at much higher price levels, the mid-50s, compared to when we saw extreme fear the last time, which was in the low 40s. So really interesting to see how we're extremely fearful at higher price levels, significantly higher price levels, from 40k to 55k. And the price predicament is quite similar relative to the pi cycle moving average, relative to the retracement depth. Sentiment is an emotional thing here. We're in a parallel situation for the sentiment and for the price action analysis, as well as the data science. But nonetheless, this sentiment is at higher price levels. In any case, I hope you enjoyed this analysis. Subscribe to the channel for more videos like this in the future. And of course, like this video if you enjoyed this data focus and price action analysis on Bitcoin. Let me know in the comments down below what your thoughts are. In any case, I'm Rekt Capital, and I'll speak to you in the next one. Speak to you soon.